Market maker B2C2 is offering to buy loans from the crypto lending unit of Genesis. And as the lending arm pauses redemptions and new loan originations in the wake of FTX's collapse. So just to remind everybody, of course, Genesis is a sister company of CoinDesk. They're both owned by DCG, Digital Currency Group. Anyway, joining us now to discuss is none other than Max Boonen, founder of B2C2. Bienvenue, Max.
Good morning.
Good morning. So yesterday, you tweeted this out. You said, I didn't have Genesis on my bingo card. Wow. That leaves very few players in the OTC market. B2C2 wishes to extend an offer to purchase loans from Genesis's book to alleviate the current liquidity shortfall. So you are looking to actually buy, and we should make a distinction again. This is the lending unit of Genesis. This isn't Genesis Trading. It's a separate entity. Generally, obviously they're all both under Genesis, but nonetheless it has a separate balance sheet, etc. So you want to buy the loans from Genesis Lending. Can you explain a little bit more of what exactly you're offering, how much you're offering to pay? What exactly is this offer look like?
Exactly. The way that the lending book works at Genesis is that for the most part, they raise liability from their clients and they extend loans to other market participants, be they miners, brokers, and others. And their balance sheet always sits in the middle. So now the main reason, in my view, that they find themselves in liquidity crisis is that the maturity of their liabilities are shortened, because many people have decided to move from, let's say, perhaps they were doing 1 month, 3-month loans down to overnight loans, just on account of the volatility and the heightened perception of credit risk in the market. At the same time, the loans that they extended to other market participants, they're oftentimes for fixed term. They might be 3-6 months loans, and that's led to a maturity mismatch between the two. And so, to be clear, what B2C2 has reached out to Genesis in order to try to make some deals there is that it's not the loans that Genesis has made from its client that it's borrowed from. It's the loans that it's extended on the asset side of its balance sheet, because those are the loans that have a longer term and that B2C2 would be able to purchase in some cases in order to release immediate liquidity to Genesis and meet those redemptions of those much shorter liabilities that they have at the moment.
So the way you can liken it to would be GMAC back in the day, General Motors Acceptance Corp. It was the financial arm, if you will, of General Motors, and it would extend credit to potential buyers of cars, and it ended up becoming its own financial entity. Nonetheless, what kind of pricing do you expect to pay for these kind of for their loan book, for what their assets are?
But there's two dynamics at play there. First of all, interest rates have gone up, and the overall credit market in crypto has taken a beating. So from that pure perspective, a fixed rate loan made a year ago just doesn't have the same price today from a pure rates and credit perspective. But on top of that, there's also the fact that Genesis itself finds itself in a difficult situation, and they might be willing to take a little bit more of a discount compared to what they would do around a simple sort of fair value transaction here. And that is actually the reason why B2C2 thinks that there's something mutually beneficial that can happen here, is that at the same time.
So, I mean, to my question or the comment that I made earlier, do you have the assets on your books to buy it, or are you going to go borrow and buy these at a discount and hope to make a VIG?
So there's three things. There's B2C2's own balance sheet, which is reasonably significant. Genesis is the undisputed leader in the funding business in crypto, but B2C2 is maybe the runner-up or one of the runner-ups. So it does have its own balance sheet that is significant. Secondly, we are also considering putting together SPVs so that our clients can also co-invest in that opportunity and profit from it as well. And lastly, but not least, B2C2 is owned by a Japanese bank today, and that bank has its own balance sheet and is considering whether it would make sense here to commit some specific funds to this endeavor.
So Max, I mean, just looking at this broadly, what do you see as the way out here? I mean, whether it's participating in this particular offer that you have, or, for example, CZ coming out and suggesting that there needs to be this recovery fund for everybody. Where do you see the direction of markets and, acts like this coming in to buy distressed assets playing a role? When do we stabilize, and what is the outlook from this?
But first of all, I really welcome other players around the table, because it wouldn't make sense for B2C2 on its own to be interested in this. If we're the only firm interested in this, it means that we're probably making a mistake. I welcome the fact that CZ is actually considering taking over, as I understand, the entire loan business, perhaps, of Genesis, if a transaction can be made there. I welcome the fact that others might be also helping on some other less liquid assets that Genesis might have. For instance, it's well known that they as a sister company to Grayscale, they have units in the Grayscale funds, but those units are not necessarily easy to sell. We actually know that because 3 Arrows got caught on the wrong side of that trade back in the day. So there's a few strategies that they can go after, and B2C2 can help on some of those, but not all. And I'd much rather see different firms go and support Genesis in different ways than to have a single one-size-fits-all sort of buyer of last resort. I think that would not inspire too much confidence in the market. I think we need people to all come to the table to demonstrate that there are different pieces to the Genesis business that are attractive to specific people for different reasons. That would be much healthier, I think, for the long-term health of the market.
So, Max, it's great to have you back on the show, because you're a big picture thinker in this industry. And I think the question is everyone sort of agrees this is a mess, right? This is like a bad scene. So, what is in your view, what are the main lessons from this? I mean, if you look at this whole kind of domino effect, and we're probably going to see a lot more to come, what can we learn from this going forward? Like, what is the actual practical lesson? Okay, this all happened. We need to do this specifically to prevent something like this happening in the future. What's your main takeaway?
First of all, I can't speculate exactly as to what happened at Genesis itself. I have my own opinion.
Just to clarify, I mean everything. Yeah. I don't mean Genesis specifically. I just mean starting with FTX and then the Ripple effect. Sorry, just to clarify. Yes. Yeah.
All right. I think we have a credit market that has outgrown the practices that it's relied on. As crypto has grown, we really need to develop a proper credit market. And at the moment, all we have really is, at best, companies like Genesis B2C2 extending bilateral loans, and they're ending up lending money to 3 Arrows and Celsius and also FTX. And when those companies have gone bankrupt, essentially, everyone in the chain faced that credit contagion. It's not just the ultimate investors that have put money in the likes of Genesis that were hurt. It's everyone along the chain. That doesn't make a lot of sense. And that's the best case scenario. The worst case scenario is when you look at a company like FTX, just lending billions of dollars to an affiliate seemingly without documentation or controls around that. I think the direction that we need to follow is quite simple in reality. We just need to look at what the real credit markets are like, and we need to get the best practices, add a little bit of a sprinkle of crypto secret sauce, and go with that. And I think that needs two things. First of all, we need transparency in terms of what the balance sheets of the different companies are. And as long as you only have bilateral loans, those are all private transactions, we're not going to have much transparency. And secondly, I think we need to have more tradability of those claims. The only tradability that we've had thus far is when you look at the Mongox example, when it blew up, a few distressed assets firms came and purchased claims from individual claimants. But that was really very much after the fact. very much after Mt. Gox filed for bankruptcy. I think we need price transparency way before that. And in my view, the way to get there is to represent all those credit links, all those loans as transferable tokens. So when a Genesis makes a loan to a miner, when B2C2 makes a loan to a crypto broker, I believe it would be better if those loans were represented as tokens that would be visible so that people could know, okay, who's invested in what. And also those loans would be more easily tradable, such that instead of having to go to a broad array of market participants privately, Genesis would be able to get liquidity for its portfolio without even having to ask. There'd just be a market and they could sell some of the loans. And presumably, if the shortfall is not too big, you take a little bit of a hit, but you don't get into
Max,
that liquidity shortfall as they have.
I guess the real question is, and we're just sort of running out of time, but like, who is going to make this happen? Is this an area where you think regulators need to step in, or is this something that you think the industry can do on its own?
Well, on the one hand, FTX was for the most part unregulated, and Genesis is more highly regulated, and they're both facing issues. So that tells me that regulators are not going to save us. In fact, I keep being amazed at how institutions themselves don't often pay much more than lip service to regulation. They don't think that it protects them. So I really believe more in private market solutions. I think there are actually many startups looking to do that. There's a few protocols as well. I'm sure many people have heard of Maple Protocol. I think those are all steps in the right direction. I really think that at the end of the day, at an horizon of 6 to 12 months, we need to restart the development, the development of a credit market where tokens are issued to represent debt, not participation in a DAO or as semi-equity in a company, but really to represent the debt that companies have to one another. And over time, I hope that there's going to be a market for this as well.
Interesting way to wrap up there, Max. Thank you so much. That was B2C2 founder Max Boonen.